Labs.net. We are going to do a complete analysis, very in-depth, something I did not know. But here we are with Jim Simmons, the quant trading guy. Let me just set up my proper article I wanted. Hopefully I'll get it. So here we have Jim Simmons. I think there's a spelling mistake somewhere. Anyway, it doesn't matter. But there's two articles we're going to cover. GuruFocus.com and then this advisory info from Renaissance Technologies. So this article here, Guru Focus, Jim Simmons, Pioneer Quant Manager, they go into real good depth of the history of James Simmons, how he failed as a computer programmer, all the political turmoil that went on with his partner, co-founder, Bob Mercer. That was this year. And there are some very interesting PDFs that you can download, something called a Form ADF Part 2A. This is right from Renaissance Technologies, LLC. They describe themselves an investment firm, and it condenses all the different funds, feeder funds, for the entire firm. And they explain how it works, and it goes into really in-depth with this Form ADF 2A. It doesn't go into the actual strategies, but it's quite revealing of anything I've seen from right from the horse's mouth at Renaissance Technologies. So this website, this article has gone through some in-depth revelation on how these firms work, on all the four different funds, and then it combines some other quotes on from both Bob Mercer and James Simmons, and then it talks about some examples that you would have of different equities that they would have, and the different algorithms and the different portfolio management techniques to squeeze out more profit using things like portfolio optimization, which I've gone over in the past, which is part of my deal with the upcoming strategy that I'm working on. By the way, just so you know, on that strategy, we've got a third version of a new algorithm on the exit portion. So I'm going to try that out later today, and hopefully I'll have some more news on that. So anyways, going back to this, it reveals some pretty interesting metrics, overall performance, and some sample scenarios. So when we look at this form, the Form ADV Part 2A, as I said, it's very revealing. You can see here, uniform application for investment advisor registration sent over to the SEC. It's right here, Renaissance Technologies out of New York, with everything that you need to know, filed March 30th. And it just goes into, as I said, great detail. Any of the changes that are probably on their last one. It's a 26-page document. Overall, how the firm works. The fees and compensation for their now remember, the firms, I guess we haven't gotten there yet, but a lot of the management fees are 0 to 5%. Performance allocation, 44% net profit. It goes on. I'm sure there's a lot of stuff that I'll be missing here. RIEF funds. And it goes into very detail. I'm not going to go into what this says. I'm just highlighting that this now does exist. So here's these kaleidoscope funds, how they explain them. I'm sure Renaissance Technology did not want to release this, but they have to in order to get to get registered with the SEC. So they do have to explain how these funds work, how they're compensated as well. And it's quite interesting. You can start, if you're internal, where a lot of the funds are for staff, the medallion one. You can start as low as $1,000. So here you have minimum initial investment, 1,000, 10,000, or 25,000 into either these family funds that they call them. But apply to employee and employee-related investors. So just remember that. Okay, it's only for employees of Renaissance Technologies, and there's no secrets behind that. But at least 3 investments sponsored by Renaissance. Currently, the Medallion, RAIF, and the RIDA. And they go on about how they comply with the tax laws and all that, and then they talk about some general extensive use of computers, computer generated trades. Then they talk about how from time to time that a human will have to step in. While the firm rarely intervenes in its computer trading systems, there may be occasions on which human beings must manually input corrections or updates to the data or model used by the computer system. Accordingly, no assurance is given that the trading decision is based on computer-generated info, and in certain cases, occasional human error will produce profits for the funds. Now, for the other funds, so what page am I on here? 12. The Medallion was the only one that's consistently profitable. Some of their other funds have not done as well, and when you go through this document, you'll kind of understand. So this one's for employees only. These other ones, I believe, other external clients are able to invest into, but they don't have the same performance as the Medallion. Each of the encounters specific risks based upon its style and investment. So high portfolio turnover. See, they keep it very vague. May be subject. In high transaction costs, because of the high turnover, can generate taxable of that greatly significant, greater or less than the investor's share of net economic gain or loss of a fund. Then they talk about the non-U.S. equity risk. Maybe less, this is for non-U.S., maybe less liquid, and their prices more volatile than comparable securities of the U.S. It goes on about that. High leverage, may borrow either directly or indirectly to finance the acquisition of securities and will secure such borrowing with their assets. So they do, looks like a lot of high leverage. The amount of borrowing will vary and cannot be estimated. Leveraging enhances the ability of funds to acquire security, but also increase their potential exposure to losses. So again, they keep it very vague. Would surprise me on that. REIF, keep their predictive beta too. And there was also, mathematically, we're talking consistently about standard deviation in terms of their risk. So you may want to find that in this document. Tendency to have positive beta. The funds may be exposed to loss in times of general market downturn and declining prices of equity securities. These are the lower funds with lower returns, I should say. Position size may hold significant individual positions. So there you go. Such large positions can be difficult to exit quickly without affecting their price because of market impact. Trade slowly given blah, 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 short term, non-equity risk, blah, blah, blah. Now, remember I was talking about standard deviation? This is the interesting one. This is also mentioned earlier in this document, operates with this target for empirical standard deviation. There can be no assurances of a standard deviation target will be met. The target is not a guarantee or a prediction of volatility. limited operating history were performed recently and have a limited operating history. So they probably obviously put in as minimal as they can into these these fund descriptions. Risk of fixed income trading. So they do obviously fixed income when times are tough. Volatility, interest rate fluctuation, mortgage-backed and mortgage pass-through instruments. They talk about these are high risks, but not reduced liquidity, short sales, CDS, reverse repurchase agreements, hybrid instruments, interdisciplinary, other financial activities and affiliations. This is the structure of the firm, and obviously the code of ethics stuff, blah, 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 that they need. Brokerage practices. I believe they use, was it New York Mellon as their prime broker. It's very fascinating. Will not receive any soft dollar benefits from brokers. So obviously they try to stay above board. Future Renaissance determines that accept research. If in the future Renaissance determines that will accept research, it will pay using hard dollars or soft in accordance with section of. Yeah, a lot. This is going on in Europe with the research, paying for research. The firm operates the models for each of its funds independently from one another. Separate machines are assigned to each fund and they do not interact with each other. The firm's systems will not combine. The orders will be randomly allow one order to go first, thus following one trading entity to enter the market before the other. Firm has no control over timing or manner in which orders are filled, which is true. May not be review of accounts. Not sure if I might be confused on the New York Mellon thing, but I'm looking for it. Have access to weekly fund performance updates. These are the clients. Individual investment, monthly assets under management information, monthly risk reports, monthly commentaries, subject to certain confidentiality obligations, more restrictive liquidity provisions. Investors in certain of the have access to quarterly reports that include position level transparency on a delayed basis. So if you're a customer or a client of Renaissance, very interesting for confidentiality. So do realize they don't list the medallion here. The medallion fund is not listed in any of these. REIF, RIDA, Ridge, series of access to quarterly reports that include position level transparency on a delayed basis. So realize that, delayed. Client referrals. Very fascinating on the structure of this company. Custody, of course, the custodial funds. Okay, so are prepared by the firm's administrator, the Bank of New York Mellon. So they, I believe, for investors are prepared by the firm's administrator, Bank of New York Mellon. Investors could carefully review their account statements. Investment discretion. So they, as I said, they try to stay above board. Voting client securities. So I find this a very fascinating document coming right from the Renaissance Technologies, on top of being submitted to the SEC. So there you go. Let me know what you think. I think you could probably pick up quite a bit of news on this, even though I might not have covered it in detail. But again, another fascinating item from Renaissance Technologies. Over and out. Later.